Hey everybody, I hope you're all doing well. I just decided to record this quick video as a case study for this Aussie dollar trade. So we're currently on the 1 hour time frame. I just wanted to break down my thought process behind this trade, the technical analysis that took place, and how exactly it played out. So like I said, we're on the 1 hour time frame. Now, initially I used the SMC indicator, which perfectly highlighted this 1 hour order block, and the way I have the replay tool set right now, this is basically where I saw price action as soon as I got to my charts this morning. So I clearly saw that price has already mitigated the 50%, the equilibrium of the order block on the 1 hour time frame, and we've already rejected it. So that already confirms a short bias. We can see that supply is being well respected. So it's certainly less of a risk entry in this case because we already know that this 1 hour order block is respected. So anything we do on lower time frames from this point on could technically be considered a confirmation entry because this has already been confirmed. And so if we're dropping to a lower time frame, we'd be looking for more minor structure. So what I did from here is I dropped down to the 5-minute time frame. Now, before I do so, I'm just going to highlight this order block manually because once I drop down to a lower time frame, the indicator gets a little bit messy, so it's not going to show this 1 hour order block as clearly anymore. So on the 5-minute time frame, this was my perspective. Let me just rein this back a little bit, get it out of the way. So that was the 1 hour order block. We obviously tapped into it, traded away from it, created a change of character or break of structure, same thing. And the indicator created 2 order blocks here, 2 very high probability order blocks, okay? So one was more recent. Actually, I think price was a little further ahead when I sent the analysis to the group because if I just go back to the daily analysis here, so this was the 1 hour perspective that we just went over. And then I dropped down to the 5-minute time frame and I shared with you all these 2 different trading parameters to potentially take short trades. So they were based on these 2 order blocks here printed by the indicator. So I believe it was a little bit further ahead. I think I have, yeah, that's why internal structure was turned off there. Yep. So it was a little bit further ahead, but yeah, we had these 2 order blocks printed for very obvious reasons. The initial change of character back here and the break of structure right here. So that printed these 2 order block zones. So they're both high probability zones to trade from, and that's why I shared both of them right here. And I did mention in my analysis, the extreme option is of course safer, but poses the risk of never being mitigated. The most recent order block is more likely to be mitigated, of course. So just following current order flow, of course, this would be the easier target. But if this were violated, if we were to take a loss on this order block, for example, this position here, then this one up here would still in fact be valid, and I'd be happy to take a short trade from there. So this brings me to an interesting point. I get asked very, very often, Ara, which order block should I choose out of these 2 or 3? There's not always a correct answer to that. Like for me too, there's just not always a correct answer to that. When I'm doing my own analysis, I see 2 order blocks that either one of them could be valid and could present an extremely profitable trading opportunity. So what I'll do is I'll split my risk. Instead of risking 1% per position, in this scenario, if I were to do 1% per position and I lost the first trade, well, what if I lost the second trade too? Then I'd be down 2%, right? So instead of that, I would risk 0.5% on each of these, because then I could comfortably take the first loss if it ends up being a loss, and then hopefully profit on the second position and make that loss back plus significant profit. But even if I were to take the second loss too, I would still only be out 1%, which is what I would usually risk on a single trade. So rather than focusing on which order block to choose, just make sure all the order blocks that you're analyzing are valid, right? Both of these order blocks are valid. So that's all I care about. It doesn't matter which one price reacts to. I just have to be ready and available to execute. Okay, so with that being said, let me just go into the object tree because I already have the position here. Okay, so that was the further away one. I'll just hide that for now. Where are we? There we go. So this was the first available position, the one that I felt was most likely to be mitigated. And then we had, of course, the further away, the extreme order block, just in case, right? So if I just play price forward, let me slow it down a bit first. Mind you, this this target here, I'm not sure why it's showing up like this now. When I was looking at this before, the 5-minute demand zone was a little bit higher up. It was, I believe, based on this candle right here. So that's why I set my take profit to there for 9.43R at 33 pips for the take profit. Or maybe I was looking at it wrong or something, but I believe this zone was different at that time. Anyways, this is where I set the take profit. I executed this trade, of course, on my own as well, but I also activated paper trading on TradingView. The reason for that is because I wanted to record this this trade live. I did. I have the screen recording for it. I'm going to be creating content around that as well. But the reason paper trading is so cool on TradingView or connecting your broker as well is because it shows, similar to MT5, MetaTrader 5, it shows the arrows for your exact entry and exit point. So I think that's really cool. It's going to be really useful to share that with people on Instagram as well. So yeah, let me play price forward. Okay, so right there, as you can see, price tapped into the entry. Now, I just want to mention briefly before I move forward, the reason I didn't target the equilibrium on these order blocks as I would usually do is because I was comfortable with the risk reward ratio, right? This allowed me a stop loss of 3.5 pips, which is perfectly fine for me. Basically, my minimum is 3 pips. And my maximum is 10 pips for a stop loss. That's just my personal rules. You don't have to go by that. That's just what I feel comfortable with. I don't like 1.5 pip stop losses or 2 pip stop losses. I'm not greedy like that. I'm not trying to get away with, that tight of a stop loss. This is perfectly fine for me. So by targeting the low of the order block, you have a better chance of being tapped into the trade. We all know that when we target the equilibrium of an order block, there is always a risk that we're not going to get tapped into the trade. And we all know what that feels like when we watch price take off without us, when it was just a couple pips away from our entry. It's not a good feeling. So the only time I target the EQ is if I'm not comfortable with the risk to reward ratio or the stop loss size from targeting the low or the high of the order block. But in this case, at 3.5 pips and a take profit so far away that it achieves 9.43R, I was perfectly comfortable setting the entry for the low of the order block, right? So let me continue to play price forward. Had a little bit of consolidation. Price came a little bit higher up, tested something around here, probably on the 1 minute or the 30-second or something like that. None of my concern, to be honest. And then it pierced through this low, not impulsively, because we created some wicks here, so it's not really a valid break of structure yet. But then, of course, it broke further. It looked impulsive, but then came back up. So still a bunch of wicks, although the indicator considered it a break of structure. So it printed another order block here, which is also valid to trade from. But as you're about to see, price never made it back up there, at least yet. So there you have it. Pretty straightforward. I guess in replay mode, it doesn't show the arrows, but you all saw the pictures in the Discord. Yeah, so okay, they're not available there too when I copied the link, but that's why I screenshotted it, because when I took a screenshot manually, it showed where the arrows were. So there was the sell arrow, the red one right there, and then the take profit arrow where the position was closed. Now, obviously it was closed at this level here, but on TradingView, I guess it just prints that when the actual candle closes. So that was the final look of that candle when it closed. So yeah, so it's pretty straightforward. I like that the TradingView option just shows, similar to MT5, it shows the entry and exit. So that's pretty cool. Yeah, but as you guys can see, this was extremely precise. that's got to be in like the top 3 precision trades that I've ever made. Like that's, if we just zoom in on that a bit, like that is absolutely absurd. There was literally no drawdown. Now, one thing I'd like to mention too is, of course, with trades like this, you should be with a broker that has extremely tight spreads. So you have to make sure that you have tight spreads, or if not, then you would have to set your entry, like your analysis could be the same just like this, but your entry would have to be a couple pips lower, something like that. You'd have to accommodate for the spread that your broker has. So that's something you should check before setting a buy or a sell limit order. You should check the current spreads that your broker is offering for that pair and accommodate for that accordingly. So I hope you guys enjoyed this little case study video. Just explaining the validity of these order blocks, why they were targeted, in correlation to the higher time frame bias, of course. So this all started on the 1 hour time frame, and as you can see, we only utilized 2 time frames for this entire trade. It was the 1 hour time frame and the 5 minute time frame. Trading does not need to be complicated, and you know, this indicator actually is one thing that makes it less complicated. It eliminates most of the chart work for us. And on the 1 hour time frame as well, in terms of market structure, could have also used this indicator here, right? Just to have a better understanding of the swing structure. As you can see, we created a lower high. We already had a lower low. Like this is bearish market structure. This is bearish order flow right here. So that's all I was doing, is following that order flow. Seeing this lower high printed here, that was more of a confirmation for me too. And seeing it react so strongly to this 1 hour order block and trade away from it in a significant impulsive manner, it's just added confirmation. So like I said, I hope you guys enjoyed this video. Hope you gained some value from it. Also, I've mentioned in the past too, this indicator here is completely free. So go to the resources section and get it for yourself. It will really help a lot of you in terms of identifying swing structure and internal structure. What I would recommend is maybe keep it to the higher time frames, like 4 hour and 1 hour, maybe 15 minute as well. It obviously does get a little confusing on the lower time frames, but in terms of identifying swing structure, this is really beneficial. So once again, hope you guys enjoyed this video, and I'll talk to you all soon.